over to Ms. Shweta Arora, Head of Investor Relations, United Spirits Limited. Thank you, and over to you.
Thank you. Good afternoon, everyone, and welcome to United Spirits fourth quarter and financial year 2024 earnings call. Today on the call, we have with us our Managing Director and CEO, Ms. Hina Nagarajan, who is joined by our CFO and Executive Director, Mr. Pradeep Jain. Hina will start today's call by providing an update on business performance during the period, while Pradeep will run you through the financial performance, post which we will open the floor for questions. For the call, I request you all to please refer to the financial releases and press release posted on the stock exchange on Friday evening, and additionally, the investor deck posted today. With this, I hand over the call to Hina for her opening remarks. Over to you, Hina.
Thank you, Shweta. A warm welcome to all of you to our Q4 and full financial year 23-24 call. We have a presentation for you as Shweta has outlined. So if I can just request you to go to the next slide, please. And the next one. Yeah, basically we have three parts to this presentation. The first one is that I will give you a business update for the year. And then I will hand over to Pradeep for the financial highlights. And then I will come back and close the call, a little bit of looking ahead. And then we will open the forum for questions. So let's jump straight away into the business update. Next slide, please. Next slide, please. Yeah, so just a reminder, our mission, as you are all very familiar now, is to be top-performing CPG company in India, delivering sustained double-digit profitable top-line growth and long-term value to all our stakeholders. As you're also aware, our strategy to achieve this is built on three pillars: portfolio reshape, building an organization of the future, and our ambitious goals within Diageo in society. I will now cover progress during the year on each of these three pillars. If you can go next, please. So coming to portfolio reshape, next slide, please. The first thing I'd like to say is that our portfolio actually provides multiple premiumization levers to help consumers drink better, not more. We have premiumization opportunities within segments, so that's essentially between popular and P&A. The second lever we have is within P&A itself. So we've got lower prestige to mid-prestige, then upper prestige, and of course to our luxury and premium portfolios. We have premiumization opportunities within our trademarks. So if you look at, Royal Challenge and Royal Challenge American Pride, that's a premiumization within the same trademark. I'll cover a bit more on that. And then last but not the least, our premiumization opportunities between categories. We will be highlighting the progress made on each of these levers in the following slides. Can you go next, please? So coming to the first lever of premiumization, which is within the broader segments, popular upgrades to P&A. We have continued the journey of premiumization with improving mix of P&A. And our share of P&A now stands at 89% in the year gone by. And this 89%, just to let you know, this is the NSV, which excludes sales from the non-brand revenue. So 89%, great progress since we launched strategy in F21, now at 89%. Next chart, please. On the second premiumization lever, which is within the prestige subsegments, if you just look at the bar charts on your right, we have seen significant shift in NSV saliency post our new strategy. Growth in the luxury premium portfolio has accelerated significantly from FY21, with this segment now contributing to more than one-third of our NSV salience. And you can see that we have also gained both in mid-prestige and upper prestige. Next chart, please. On the third lever of premiumization, that is within trademarks, we have intensified our brand innovations over the last few years, aligned with changing consumer choices, entry of new cohorts, and premiumization trends. These innovations have been premium variants of existing trademarks and have gained meaningful saliency within the trademarks in a short span of time. If you look at the first graph on the right side, basically Royal Challenge, and if you look at the orange portion of the FY24, that is the innovation of Royal Challenge American Pride, which was launched in FY22. in upper prestige, and that has already become 8% of the Royal Challenge trademark. Similarly, if you look at Black Dog, which is the bar charts in the middle, you can see that our triple gold reserve, which is the more premium variant within Black Dog, is now 40% of the overall trademark. And similarly, if you look at the chart on Johnnie Walker, you look at that yellow bar which says 7%, that is the salience now of Johnnie Walker Blonde, which was the latest addition to the Johnnie Walker family, positioned in between red and black, and now 7% of the trademark. Keep going, next chart please. And then premiumization lever 4, which is within categories, which is by introducing and creating new categories. Premiumization of the white spirits ladder, starting from vodka, gin to now tequila. USL now has a portfolio that covers multiple categories with brands across the price spectrum. Of course, the latest launch has, as you know, is Don Julio. And you can see that Don Julio is premiumizing on that ladder of white spirits. And we have variants that are addressing all the price needs of the consumer in white spirits. Next chart, please. I'll now spend some time on prestige and talk a little bit of our initiatives in the prestige category. Next chart, please. The first thing I want to talk about, which I'm very, very proud of, is that we are stretching our anchor trademark McDowell's to new frontiers. A significant milestone in our ongoing journey towards premiumization is the launch of McDowell's X Series, the products you see to the left of the chart, a unique range of rum, gin and vodka from the house of McDowell's, and also extremely proud of the launch of McDowell's Indian single malt whiskey, which is a pivotal step forward in executing our strategic vision. The launch event of McDowell's Indian single malt was held in Gurgaon, was graced by the presence of numerous prominent opinion leaders and respected journalists from various esteemed publications. And, you know, one of them told us actually that it's about time McDowell's did this. So that's a lot of, validation of our strategy. Both the launches are showing early positive signs and stand testament to our steadfast commitments to premiumize our portfolio across all trademarks. Can we have the video, please? Thank you. Next chart, please. McDowell's large legacy and loved brand status required an emotional and purposeful media campaign, which we have done with a new celebrity face, Kartik Aaryan, and a new campaign anchored on Yari, but reinterpreting Yar in the context of the new generation. As a result of this campaign, we've seen a 5% increase in brand equity scores, which is quite a large shift. This is driven by the brand being more salient, visible to consumers. There's an 8% increase in awareness on an already large brand. And by connecting emotionally, we have seen an increase of 7% in meaningful brand. McDowell's also collaborated with King and Karan for a new interpretation and version of the Rang Barse song, which had a massive reach of 120 million. Can we have the video, please?
Rather busy. One sec. Let me call you back. अगले रोल के लिए
हाय, मेरे मैसेज का रिप्लाई तो कर देता।
ओए कुकी, तेरा ब्रेकअप वाला डायलॉग है यार। पता था हर साल यही करवाते हो, मगर हमेशा एक यार छूट जाता है। ऋषभ, ये तेरे लिए। संजना, प्रॉब्लम ये नहीं है कि ब्रेकअप हुआ है, मेरा फेवरेट कलर ब्लैक है। कैसा लगा? 6 महीने से घिस रहा था, प्रैक्टिस कर रहा था, तू बोल रहा है ठीक ठीक। जो हमेशा कुछ नया सिखाती है, यारों वाली बात तो वही होती है। हाउस ऑफ मैकडॉवेल्स, यारों वाली बात।
So as you can see, right, one of our strategic visions is to drive more progressive portrayal in media. And clearly one of the underrepresented sections of society are people with disabilities. So this campaign, this was the purposeful campaign, and this was the idea of more progressive portrayal of such population. And this is one of the biggest reasons why there has been such a huge increase in the meaningfulness score of the brand. Can we go to the next chart, please? Coming now to Royal Challenge. Royal Challenge has grown ahead of the market throughout the year. Royal Challenge leveraged the IPL season to scale up its media and on-ground presence through social media campaigns, moment marketing, including physical presence with the Royal Challenge hook step in the RCB matches in the stadium, which got great coverage by media. As a result, Royal Challenge punches above its weight, with its equity 1.8 times its presence in the market. The stretch of the brand, Royal Challenge American Pride, as I had mentioned, fastest new brand to reach milestone volumes in the first year of launch. It is loved by young people who desire new flavors and experiences in whiskey. And 91% of the people who have tried Royal Challenge American Pride have repeated it. And that is industry best standard by any mark. So a good year for Royal Challenge. Keep going, please. Next slide. Of course, you know, the Women's Premier League took center stage in Q4, and we are really proud that RCB women's team clinched its maiden IPL trophy. The victory resonated very widely, drawing immense attention and engagement on various platforms. Royal Challenge Whisky had a strong presence during this Women's Premier League, with the brand prominently showcased across stadium screens and star players sporting our logos, ensuring high visibility and brand recognition. The RCB men's team also continued to be ranked as the top 5 sports team in the world in terms of social media interactions, with high engagement through and even after the end of the IPL season. Again, a proud moment for us in the year gone by. Next chart, please. Coming now to our upper prestige resurgence with the dual trademark. Firstly, Signature. Signature has continued growing ahead of the market, embedding its differentiated positioning of crafted from nature. Signature sponsored India's biggest sustainable music festival, Zero, and multiple green music festivals around the country with its signature Green Vibes property. It continues to maintain brand equity lead, with equity score at 111 index to the market leader. Antiquity, the year gone by was the first year of renovation. In fact, the renovation came to the latter part of the year, and it is anchored on the core insight of the young generation wanting to discover and express their creativity. With the new bundle, Antiquity brand awareness has grown by 41% over last year. Antiquity launched the brand purpose platform of Antiquity Discovery, and we brought alive the proposition through a 6-city tour in collaboration with the Little Black Book, and the brand is now going from strength to strength. Next chart, please. A little more on Signature. I have mentioned that we are trying to build and strengthen the purpose in all our brands. We are really proud of the purposeful work Signature is doing. Signature Packaged Drinking Water is driving a mangrove regeneration project in Orissa. The restoration efforts are spread across 60 acres in 5 villages near Puri, Orissa. And the core objectives are to address coastal vulnerabilities through regeneration of native mangrove patches in Asranga, Puri, Orissa, decarbonizing the atmosphere through long-term carbon sequestration in coastal mangrove. This initiative is progressing really well. Next chart, please. Coming now to our luxury and premium portfolio and the initiatives and progress made in this portfolio. Can you go to the next chart, please? Firstly, Johnnie Walker. We have continued to strengthen our leadership in luxury and premium segments. Of course, our flagship brand, Johnnie Walker. Johnnie Walker Blonde is successfully recruiting young consumers into the Johnnie Walker trademark. We've had successful activation in youth-led events like Lollapalooza and Echoes of the Earth. We collaborated with the Aravani Art Project, a transformative art collective led by trans and cis women, to embrace people from the community and create awareness in society. With all the work done on the brand Johnnie Walker during the year, brand awareness has jumped by 62% on the base of previous year, which is already very large, and brand equity has jumped by a huge 31% versus last year. Can we have the video on the Aravani project, please?
Through a riot of color and art, we reclaim the spaces that were always ours.
We are the Aravani Art Project.
We make way for others to keep walking.
As you can see, again, lots of purpose and progressive portrayal built into our work. Coming now to Singleton, we introduced the experiential luxury brand extension with Nicobar, the Singleton Social. We have tapped into consumer communities through multiple channels: Tastemaker Network, key opinion leaders, immersive Epicurean experientials, the Jaipur Lit Fest, Condé Nast Restaurant Awards, and more such collaborations. More than 10,000 plus organic social media in the first 6 months of launch, and the brand continues to build a very strong and unique position in single malt. So all told, a good year for Singleton. Next chart, please. Coming now to the other part of accelerating our luxury and premium portfolio, our bottled in India scotches, Black and White and Black Dog. Talking about Black and White first, it was the fastest growing primary scotch in the market. Our campaigns, again, are purposeful campaigns made, built around made for sharing and table for everyone. They encourage inclusive conversations to get people together and were a huge hit, especially during the World Cup. Can we have the video for Black and White, please?
Stay-at-home husbands are called house husbands, Papa.
We call you guys boomers.
And what about women who don't want kids?
We call it their choice, no?
So again, very purposeful communication, giving a message, really helping inclusion. And, I continue to be very proud as I say that we, as India, remain the largest Black and White market in the world. So we continue that ranking. Coming now to Black Dog. Black Dog continues to, maintain its brand momentum and has a very, very loyal set of consumers. During the year, the brand kept driving its positioning of Savor the Pause through various associations, associated with comedy artist Trevor Noah's first ever tour to India. And we had 360-degree amplification across digital, out of home, radio, cinema, on trade, off trade for that tour. We sponsored Veer Das, who is an International Emmy Awards winner. We sponsored his India tour across 20 cities. And we did an easy evening campaign with shows featuring some of India's famous stand-up artists like Kenny Sebastian, Rohan Joshi, Malika Dua, with Black Dog Triple Gold Reserve-led liquid experience. And with all this, Black Dog continues to be the #1 brand equity in its segment, 121 index compared to its nearest competitor, and 196 index to the #2 competitor. So again, very, very strong brand reinforcement during the year for Black Dog. Go to the next slide, please. Godawan continues to champion Made in India and build its sustainable modern luxury promise for the world. A notable milestone for our brand, Godawan 100, was recently crowned Single Malt Whisky of the Year at the 2024 London Spirits Competition. I can tell you that this is one of the hardest competitions to get this recognition in, and we are super proud of the fact that our Godawan 100 has been declared the winner. Godawan 1 Godawan 1 was actually awarded platinum and Godawan 2 double gold at SIP Awards in Los Angeles. Godawan now is one of the most awarded Indian single malts with more than 42 awards in its recognized by 42 awards, right? Our distillery has received the Alliance for Water Stewardship certification in Alwar, and it is the first spirits distillery in Asia to receive the certification. Alwar Distillery was also awarded the Sustainable Distillery of the Year and Craft Producer of the Year at the 2024 Icons of Whisky. So lots of recognition continuing for this fabulous brand of ours. And this hugely awarded brand is not only helping to conserve the Godawan bird, but is making a huge impact on the communities of Alwar. We are replenishing over 64 million liters of water annually in partnership with our NGO partner, Gramoday Samajik Sanstha in Alwar. We are constructing 4 check dams over 12 miles on the Ruparel River. We have constructed over 145 toilets, and provision of clean drinking water has been made in 6 villages across Alwar. We have provided Bhopa community with access to toilets and improving hygiene. And we have planted 200,000 trees along the river and catchment area in partnership with the District Forests Department. You know, Rajasthan is a very parched state, and all our initiatives are really making a big contribution to both conserving and replenishing water in this state. Can we play the video, please? Next chart, please. Coming now to our newest entry, talking about our initiatives to expand tequila and agave spirits in India. Don Julio has finally arrived formally in India. 4 products, Blanco, Reposado, Añejo, and Don Julio 1942, with high-impact launch events in both Mumbai and Gurgaon. As you are aware, tequila has been one of the fastest growing white spirits in the world since COVID, and we saw traction in India too. We had been feeding Don Julio 1942 already in the country, and we felt that it was enough traction in the country now to bring in the full portfolio. Our earlier responses on the portfolio are very positive, and we will continue to invest to build Don Julio in India. We have also, in line with our strategy to promote craft spirits made in India, we have made an investment of 5.65 crores to acquire 15% stake in Pistola, which is the first Indian-aged 100% agave spirit. It is aligned to our strategy, firstly, of adding premium craft brands to our portfolio. Pistola has unique Indian ingredients and provenance that complements our global portfolio. It has multiple variants to offer a variety to the consumers at a premium price point, which is lower than Don Julio, therefore completing the price ladder. It has a strong market presence already within India, which is Goa, Maharashtra, Haryana, Karnataka, and West Bengal, and already in 3 international markets, US, Singapore, and Thailand. Can we have the video for Don Julio, please?
Era una obsesión personal la de Don Julio. Yo andaba visitando sus predios él mismo. Don Julio era muy atento, yo estaba muy al pendiente de ellos. Mi nombre es Ricardo Acevedo Martínez. Soy de Acotonilco, Alto Jalisco. Lo que él sabía, lo que había aprendido a través del tiempo, lo compartía con nosotros. Don Julio añejaba sus tequilas por encima de lo usual. De esa manera encontraba mejores notas para darle mejor perfil a su tequila. El cocimiento tiene mucho que ver. Nosotros seguimos usando los hornos de mampostería. Es el mero, es el original. Don Julio escogió las barricas de roble blanco americano para añejar su tequila. Él creó el primer tequila de lujo en el mundo, que fue el Don Julio Reposado. Don Julio era sin duda un pionero del tequila.
All right, to wrap up this section, we go to the next chart, and I just want to close by saying that our advantage portfolio blends both volume and value scale. We have 3 trademarks, which are of net revenue 1,000 crores plus. and 3 trademarks which have revenue of 500 crores plus. McDowell's, Royal Challenge and Johnny Walker with 1,000 crores plus, and Signature, Black Dog and Black and White with 500 crores plus. We have 7 1 million case trademarks now in our portfolio, of which McDowell's is 10 million plus volume, Royal Challenge is 5 million plus, and then Johnny Walker, Black Dog, Black and White, Signature, and Director's Special Whiskey at 1 million plus cases. So I would say our portfolio is really advantaged and gives both volume and value scale. Coming now to saying that I have been talking. Next slide, please. Next slide, please. Yeah. I just want to end the portfolio section by saying we have a virtuous cycle of profitable growth. We have a cycle of sustained A&P investments driving improved top line for our brands, using productivity, price and mix to generate money to fund those A&P investments, which in turn then drive top line growth and give us further ability to invest in our brands. So our cycle of profitable growth is virtuous, and we will continue to invest in our brands, which are our biggest long-term assets. Next chart, please. Coming now to the second pillar of our organization of the future, to just walk you through a few highlights of our progress on this pillar. Next chart, please. We continue to strengthen our employer brand through various high-impact interventions. We have launched a new employee value proposition, which is built on 3 key pillars. Diageo India is the best place to grow. You can shape the future with us, and we will support and reward you. Post the launch of this proposition, our career section on the website has seen 50% increase in users post this launch. Website page has been revamped. We are seeing nearly a 20% increase in the number of followers on our LinkedIn profile since the last year. We continue to drive our ambition to be the most inclusive employer through progressive policies and culture building initiatives. And we have strengthened our capability building programs. We have launched a new learning and development framework, tailored learning curriculum focused on 4 learning pillars and designed to enhance skill sets. We are building huge innovation capability through our state-of-the-art innovation facility in Bangalore, which is the only DSIR certified facility in Alcobev research, and then 45 crores investment in a state-of-the-art craft center in Ponda, which is meant to innovate not only on our craft portfolio, but support the craft ecosystem of the country. Can we have the video, please?
Hello everybody, my name is Vikram Damodaran. I'm the Chief Innovation Officer for Diageo India. You are now with me at the Mad Scientist Den, what we call the Good Craft Co Kitchen. When you bring science and art together, you create delightful expressions.
At our Innovation Center, we intend to take progressive instance for creating the great spirit out of India.
This place is the only nationally certified lab for Alcobev research. And the perks of having the certification is a model plant that can literally produce exactly what a distillery does for us. And what lends character to these beautiful liquids is really aging them in different kinds of woods, because they add flavor, they add color, they add character, they really enhance the sensory experience. As you have seen, R&D Center here, what we call the Good Craft Co Kitchen, plays an embedded role in every step of the process to bring the love for Indian craft spirits to life, starting with a 45 crore investment at our craft distillery at Ponda, Goa. Now, I'm going to see you more often with these magical bespoke spirits. And therefore, on that note, tata and see you soon.
And all these continued initiatives show up in our overall employee engagement results. I'm going to flash up to you the most recent survey results, which are, a few weeks old. Can you come to the next chart, please? Our overall engagement score is 89%, which is extraordinarily high. It is 1% above last year. It is 7 points higher than Diageo overall and 12 points higher than any external benchmark. 94% of our people say they are proud to work for Diageo, which is 6 points higher than Diageo overall, 15 points higher than external benchmark. 84% of our people feel extremely satisfied to work at Diageo, which is 9 points higher than Diageo overall, 9 points higher than external benchmark, and 88% recommend Diageo as a great place to work, 1% higher than last year, 7 points higher than Diageo overall, and 12 points higher than any external benchmark. So this motivates and inspires us to continue to do more to try and build the most inclusive workplace in India. Can we go to the next chart, please? The other part of building an organization of the future is really accelerating digital and technology end-to-end across our organization. And we continue to deploy technology across each function on supply, our transport management system, which gives us end-to-end visibility of logistics costs, and we expect that that will contribute significantly to our productivity. The O9 planning tool, which is used to forecast sales plan basis statistical trends. On commercial side, several tools that we are using to enhance our commercial excellence. Image recognition based software, which helps us look at our availability, facing, share of shelf at each outlet, and then fill in the gaps. Salesforce automation, which brings us visibility of retail execution standards in our outlets. And as you know, we have very few outlets in the country, so every single outlet is a huge point of purchase and a huge point of connection with consumers. So the better we get at these outlets, the better we do in our business. On the marketing side, basically scaling up on critical areas, digital marketing, our own platform led by the in.thebar.com. Using marketing technology with platforms like CDP, Salesforce Marketing Cloud, and driving marketing effectiveness to make our spend more efficient. Basically, with all this work on marketing, this has resulted in a 10x increase in our visits to the website, 10x increase in our organic traffic, best-in-class bounce rate and website metrics, 3x increase in time spent on our website and engagement rates, and all at 50% reduction in cost. So I would say great progress on the digital side, but of course, lots more to do in this area. Next chart, please. Coming now to the last but not the least pillar, Diageo in society. Very, very critical and ambitious plan that we have. Go to the next chart, please. On promoting positive drinking, next chart, please. On promoting positive drinking, the three programs that we have wrong side of the road to address risks of drink driving, Act Smart India, which is curbing underage consumption, and Drink IQ, which is our campaign on moderation. Significant progress made during the year, educated 300,000 people on underage consumption. We've created awareness on drink driving risks among 700,000 people, and we have developed partnership with 32 regional transport offices across India to take our anti-drink drive module before the license is issued, which is true impact creation. And then Drink IQ, our consumer-facing campaign, really going all the way to promote responsible consumption, both online and offline. Go to the next chart, please. On inclusion and diversity, again, progressing very well. I'll talk a bit about our external campaigns, Learning for Life, which is the business and hospitality skills training program. Especially on people with disability. We have graduated 100 students in the first batch. We have done a tie-up with the Skill Council for Persons with Disability. These 100 students are getting very good placement, and we have now signed an MOU for training further 300 students. 1,784 students were trained for the hospitality sector through a National Skill Development Council certified program. Over 50% beneficiaries of this program are women. We have also set up a women micro enterprise initiative in Nashik. 200 women who are now generating 5,000 rupees extra income per month. We have enabled this micro enterprise to process unsold produce, reducing crop loss, food waste, and creating livelihoods. Can we have the video, please?
Hello, everybody. My name is
Ram
and I'm the Chief Innovation Officer for Diageo.
Okay, doesn't matter. We can skip the video. Can you go to the next slide, please? Yeah. On grain to glass sustainability, both water and our GHG emissions. We have replenished more water than we use. We have replenished more than 1 million cubic meters of water across water stress sites. This is 25% more than our target and 3 years ahead of our target of 2026. We have achieved 44% and 30% improvement respectively in our distillation and packaging water use efficiency. We have promoted water stewardship hierarchy and intuitive framework of water circularity in our operations as a standard practice. We have installed chillers with waterless cooling circuit at 2 sites. Similar concepts piloted for our distillery cooling processes. We are also on track to achieve our net zero in our direct operations by 2027. We are on track to achieve 100% renewable electricity use, currently at 98.6%, which is basically contributed by in-house steam turbines, biogas engines, and solar plants. So again, very strong progress on both water and our reduction of carbon emissions. Go to the next chart, please. With all these initiatives, I'm very pleased to say that we have made consistent improvement in our ESG ratings through not only sustained action, but also being able to show and share this documentation with the rating agencies. As per the latest report by Sustainalytics in April, we are now rated low risk on ESG. And we have A rating by MSCI, which is in line with our key CPG peers. So good progress on this front as well. Go to the next chart, please. Clearly, I mean, our goal was that we want to build value for all our stakeholders. We are being recognized for value creation, from multiple stakeholders. If you look at our workplace practices, we've been ranked Gold Employer for LGBTQ+ inclusion by the Pride Circle India Workplace Equality Index. We are featured on the list of LinkedIn Top Companies 2024, the 10 leading workplaces in retail and consumer goods in India. We are in the top 20 companies in Equileap's Gender Equality Report and ranking for emerging markets. We have various recognitions also on the manufacturing and ESG practices side. We have various environment, health and safety and sustainability awards by various prestigious organizations. Our Baramati unit has received the British Safety Council International Safety Award for safety culture and practice improvements. As I mentioned, we are included in Sustainalytics 2023 top-rated ESG companies list. And I already mentioned our Alvar Distillery recognitions, Icons of Whiskey India 2024, Craft Distillery and Sustainable Distillery of the Year, and of course our Alliance for Water Stewardship certification. With this, I will now hand over to Pradeep for the financial overview. Pradeep, over to you.
Thank you, Hina. Very good afternoon to all. Always a delight to interact with you. Okay, so can we move to the next slide, please? And the next. Okay, so healthy performance across all financial metrics. Let me start with the top line growth, 10.5% NSP growth and a P&A growth of 11.9%. We have delivered our double-digit growth guidance amidst a slightly challenging, relatively challenging environment, I would say. Gross margin is 43.4%. It's up 129 basis points on a reported basis, up 189 basis points on an underlying basis. And our EBITDA margin is about 250 basis points better than last year, and we are back to our mid-teen EBITDA margin. Return on capital employed stands close to 25% versus the 20% last. Can we move to the next slide? Okay, so like for like, the growth over the last 3 years, ever since we refreshed our strategy and shared it with you sometime in October 21, it's around 2x of the historical run rate, right? And I'm focusing only on the right-hand side, which is the absolute like-for-like, and eliminates the noise on account of COVID. For 2x, and the construct of the 3-year double-digit growth is in line with what we have always shared with all of you. P&A in the range of about 13 to 14%, and Popular roughly, -3, -2% to flat, right? That's broadly the range to deliver our sustained double-digit growth guidance. Let's move to the next slide, please. Okay, now this is something that we had started sharing from last year onwards. So we do want to share, we have added about 1,000 crores in net sales growth. And if you look at the left-hand side of the chart, right, when we say that premiumization ladder is absolutely intact, if you look at mid-prestige, upper prestige, and the luxury and premium segments, all these segments are growing in the mid to high teens range on an annualized basis. And if you look at the right-hand side, again, the two bars on either side is the salience of our portfolio last year versus current year. And in the middle is the contribution to the growth, right? And what we can share is that the top half of the portfolio, again, has gained about 3 percentage points of salience versus last year, which is effectively the premiumization. And if you look at the contribution to growth, almost 75% of our growth, 3/4 of our growth, come from the top half of the portfolio, which is luxury, premium, upper prestige, and mid prestige. Let's move to the next chart, please. And again, part of our virtual cycle that Hina mentioned, let me take it one by one. Productivity, huge bump up, but I do want to say that obviously the 514 crores of productivity that has been delivered in 23-24, there is a one-time effect on account of the monocarton removal project. That's close to about 160 to 170 crores. So you back that off, you are back to about 340 crores, which also is a significant increase versus the last year of 268 crores, right? So we believe that that muscle is well incorporated into our organization and will continue to chug along. Top right-hand side, if you see the pricing and revenue growth management, around the end of last financial year, some of our pricing had started, but it had not fully come into the P&L. And you can see the numbers, 337 crores, which is a combination of the headline pricing that we have received in the prior financial year and the flow through in the current year, and the fresh pricing that we have received. And on top of that, our revenue growth management productivity interventions on account of trade spend productivity. So that takes the number to a healthy 337 crores, which is roughly about 3.4% of our net. And the bottom right-hand side, our working capital intensity as in the year end has gone up a little. I'm sure all of you are already aware since the DBAR industry-wide issue. We can move to the next chart, please. Okay, so building on from the previous chart, driven by the healthy headline pricing and a very good year in productivity for the last couple of years, I would say, we have been able to up the A&P reinvestment rates, on our brands. And as you're already aware, as Hina and I keep talking, sustained A&P investments is a very, very critical component of our virtuous growth side. Right? And which in turn has allowed us to premiumize the portfolio and drive up the NSV realization per case. We can move to the next slide, please. Okay, so 1.5 years into the multi-year supply agility program, I thought it's important to give all of you a status update. So broadly, if you see our ENA co-location interventions are 100% complete. Our footprint optimization is about 60% complete. Our cash spends of the program are about 1/4 of what the full program costs were, and our non-cash costs are about 60% of the original program budget. And our cost optimization that is already into the P&L on an annualized basis is roughly about 40% of our full program expected benefits. And it's only fair that the cost optimization trails the non-cash costs and the costs a little, because it takes a little while for the benefits to be realized into the P&L. We can move to the next slide. Okay, so the last one from my side. So good to be back to mid-teens margins, and what that does allow us is to head to our highest ever earnings per share. We are at roughly at about 18 rupees a share, and hopefully we can build on the same from here onwards. I've already spoken about the return on capital employed. We moved to about 25%, obviously driven by the kicker in the EBITDA margins, and the surplus cash driving the treasury income, and obviously a little bit of bump up in the other income driven by our 100% subsidiary Royal Challenge Sports coming into dividend distribution. So with that, I will just hand over back to Hina. Hina, back to you.
Thanks, Pradeep. So just a little bit looking forward, if you can go to the next chart and the next one, please. Yeah, so I think I would like to close by saying we are confident in our growth strategy and it is working. I mean, short term, we continue to see some inflation headwinds. I mean, there's clearly continued pressure on the lower SEC consumers at the lower end of our industry as well. We are seeing, pressure. And, the premiumization, though, is intact. And though it's slower than what we saw immediately after COVID. Headline pricing, we've had 2 good years in a row. And we do expect that with, inflation cooling off in general versus the previous 2 years, our price increases will also moderate. The regulatory environment challenges continue as they have for several years. But, we have a future-backed innovation and renovation strategy focused on changing demographics, consumer insights, which is working. Pradeep just walked you through our productivity. We have proven productivity muscle, which is helping us to invest in our brands. We are strengthening our license to operate with all the work we are doing in Diageo and society, which is working as a triple win for us. It is not only our license to operate, but it is definitely something that is both helping us reduce costs, for example, the monocarton removal, and also building more sustainability, which is a good thing for the new consumer. And I continue to say that our people and culture are our strongest competitive advantage. And with this, we move into the future with, optimism and confidence. With this, we'd like to open up for Q&A, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Avi Mehta from Macquarie. Please go ahead.
Hi team, thanks for this opportunity. It was a very useful presentation highlighting the key legs of growth. Thanks for that. Could you give us a sense of the demand conditions and whether there has been a pickup versus the comments that you had shared last time?
Hi,
sorry.
Good to have you on the call. Yeah. So
Thanks.
let me talk about that. So look, on the demand front, clearly I think the growth have moderated from 2 years ago, right? And at the lower end, we continue to see, some pressure, right, on the wallet of the consumer. It was pretty strong, during the moderation was there, as we said, during the wedding season and stuff. So growths are continuing to be slower than 2 years ago. The last couple of quarters look slightly better, right, but not back on track. But the good news that we have is that premiumization is intact across the industry portfolio. And even on the, area segments where we are seeing pressure, right, of consumption slowdown due to pressure on the wallet, actually consumers are not down trading. They are managing their wallets by rationalizing the number of socializing occasions, which actually validates for us the need to continue to build brand equity because consumers are continuing to be loyal to strong, quality brands. So, I would say that, yes, there is moderation. We expect it to continue for a few quarters, just like, CPG is witnessing. But the fundamentals of the industry, the premiumization is intact, and that is really good news for our brands.
If I can just, extend just a follow-up. Basically, is it fair to read in your comments that the trajectory of double-digit growth in the prestige segment versus the 6.5 that we saw in fourth quarter is likely to take a couple of quarters, or no, that's not the right way to read the comment?
Yeah, so let me elaborate that in a bit, right? So thanks for the question. Look, on a rolling 4-quarter basis, right, we are confident of double-digit growth on our P&A portfolio, right? Now, there will be quarterly variances. I mean, you follow our business very closely. We are cycling over quarters last year, which were, 20% plus quarters, right? So that has a base effect on our business. And, the next couple of quarters, that is going to continue. And then by the time we reach October, December, right, this base effect will start normalizing. Our innovations, renovations, I just spoke about quite a few new introductions, right, which have happened recently. These will start having bigger distribution and scale. So I would say yes, we are double-digit trajectory on a full year basis. We are very confident of. And as you said, it will take a couple of quarters. But we are sticking with our guidance of double-digit top line growth.
Perfect. Very clear. Thanks a lot for that. And just the second question is on the margin, if I may. See, despite input cost pressures, it has been very encouraging to see this sharp margin expansion in FY24, and congratulations to the team for that. Now, with the supply chain program, in place, and you've given us a very good indication of the additional benefits that could accrue, should we see FY24 performance as a guide for 25? That is, maybe 100 basis points plus expansion, or is FY25 likely to be how should we see the margin performance? If you could kind of help us understand, especially given this input inflation scenario that we are finding it difficult to get a sense of. Thank you. That's all.
Sure. Pradeep, over to you.
Yeah. So, Avi, two things. Look, one I would say is that we have covered almost 2 years of margin expansion in 1 year, right? And I hope, our numbers are pretty much conveying that, right? That's one, right? And not to say I'm not kind of ducking away from your question. As we've always said that, like a forward-looking organization, we always target some margin expansion every year, right? So that will very much be our intent. It will certainly not be in the range that we have achieved in 23-24, but there will be some moderate margin expansion that we will absolutely go for. I think within that, our first task, as Hina has already articulated, is to get back, P&A to that 13-14% growth so that we can get back to an overall portfolio double-digit growth. I think that's the way we'll put it. But yes, we do target a little bit of moderate margin expansion every year.
Any guidance there, Pradeep? Sorry, I'm just trying to push it a little, but if there is any...
No, we will not give any.
No problem. Right? No problem. Thank you.
We are back into our mid-teens. Yeah, we are back into our mid-teens, right? And we will continue to build from here.
Perfect, Pradeep. Thanks a lot, and wish you luck for the future. Thank you very much.
Thanks, Avi.
Thank you. We have our next question from the line of Jay Doshi from Kotak. Please go ahead.
Yeah, hi. Thanks for the opportunity, and thanks for fairly detailed and insightful presentation. I have a few questions. First of all, I'll just clarify on the previous response. So you're confident of double-digit revenue growth at a full year level in the P&A, but an aspiration is double-digit revenue growth at an overall level, but at this point of time, you are just guiding for P&A. Is that right understanding?
No. We are guiding for double-digit growth overall, and we are saying that we are cycling over significant growth last year in P&A. And as those normalize, we will, on a year basis, continue to remain with our guidance of double-digit.
It's a full portfolio.
Perfect. Thank you. So first half will be soft, but you expect that base will be favorable in the second half. So. Second is, at this point of time, do you have any sales direct or indirect in Andhra Pradesh? And if in event of change in government, what we've, there is a possibility of that market opening up. So could you give us some color whether your product indirectly through bordering states is already available in Andhra Pradesh, or that's a big opportunity if it plays out?
Pradeep, you want to address that?
Yeah. So Jay, right now in our numbers, we do not have any sales in Andhra Pradesh. Right now, it will not be, so we do not have direct, and whatever goes through the indirect and the, grey channel route, etc., we don't keep a track of that. Right now, it's only fair to say that in some manner, some part of the product would be reaching that state, right? But yes, in our monitored numbers, we don't have anything right now. And when it opens up, we will obviously, hopefully those numbers should come and fit on top of our guidance.
Understood. Thank you. One last thing, if I may. When we look at those charts, it seems like Royal Challenge American Pride has moved. The salience has increased from 7% to 8% in FY24, but in FY23 there was a sharp up move. So has the sort of growth slowed down a bit over there, or it's just the rounding off of numbers that doesn't sort of highlight? Because when I look at upper prestige, you seem to have is the fastest growing segment for you.
So, Jay, Royal Challenge American Pride was the brand that, with the pipelining and scale up nationally, right? The first year and a half, we saw the impact of just pipelining and growing it and scaling it up in different markets. And as I mentioned, it was one of our fastest brands. I would say that after that, the growth is normalizing a bit on that large base already, because the first year was huge, right? And, we are continuing to invest in the brand. We are continuing to sort of innovate. We've just launched the 375 ml small pack on Royal Challenge American Pride, which will give further boost. So it's not, it's only to be expected on that very high base that was achieved on the first year. The brand is healthy and continues to grow.
Sure. Thank you so much. I'll get back in the queue.
Thank you.
Thank you.